let's connect with Farhan Mumtaz, analyst with Eurekahedge, a firm based out of Singapore, which tracks emerging market inflows and outflows and also maps hedge fund performance. Farhan, good morning. What a delight to have you back on ET Now. Thank you for joining us. First, the big picture. What is happening to Asia EMs and how liquidity has moved for Asian EMs in the month of June?
Hi, good morning. Well, overall, the global hedge fund industry is performing relatively well compared to active equities. The Eurekahedge hedge fund index is up nearly 2% for the year. In terms of Asian and emerging market hedge funds, they still remain in the positive territory, although they suffered some losses in May. Inflows for emerging markets are actually there are more outflows than there are inflows. So overall, we have seen more than $1 billion flow out of emerging markets over the last month, and in the year-to-date basis, it's more than $2 billion so far. But the global hedge fund sector has witnessed inflows. That's primarily due to the performance. They provide absolute returns, and they have significantly outperformed the underlying markets.
Farhan, hi, morning. What's the call hedge funds are taking now on developments in emerging markets which are cutting policy rates like China as well as Brazil, and the ones which are growing slow like India?
Well, overall, there is a view that 2012 is going to be a positive year, although it might be more volatile. And managers have expressed a positive view, especially in the long term, for emerging markets. But at the same time, they're looking to gain exposure through different methods. There's one key thing which has been expressed by a couple of managers, that GDP growth remains positive for all these markets. So they need to look into different methods of tapping into this growth. So there is increasing demand for highly liquid, high-yield sovereign issues. There's also managers looking to find ways to invest in growth areas which were previously solely invested in by, say, the Chinese government, for example. In terms of India and other emerging markets, there is the same view, but there is greater policy risk, so managers are a bit cautious because of that.
What is your understanding of money flow / fund flow for country-dedicated funds, especially India-dedicated funds?
Well, the Indian hedge fund industry, ever since 2008, 2009, it has kind of stagnated at around $3 billion. And in 2011, the fund flows were actually negative. So far in 2012, we have seen some negative outflows, but they're not that significant. But we have seen some managers closing shop because it's becoming increasingly hard for them to do business now.
And how's the asset allocation strategy right now? Are they positioned towards defensives, or is the allocation more tilted towards equities, or is it largely concentrated in commodities?
Well, most of the emerging market hedge funds are focused on equity, or they have an equity investing mandate. 55% are purely focused on equities, while in terms of commodities, we have about 12 to 13% which are focused solely on commodities. The rest are somewhere in the middle with exposures to different asset classes. Now, the asset flows that we have seen for emerging markets have been negative, mostly through equity funds, and that's primarily because they have lost money in 2011 and they have lost some money in 2012 as well. But if you look at the global investment theme, you are correct to say that it is more focused towards the defensives. Macro investing hedge funds, and there have been some large macro hedge funds setting up over the last 12 months in Asia as well. And these macro funds, which tend to provide more stability of returns, have attracted $25 billion in the first 5 months of the year. And that is by far the most significant asset flow. Most of the strategies, most of our hedge funds which employ other strategies have seen negative outflows. And some market neutral strategies, such as arbitrage, relative value managers, have also witnessed positive asset flows. So you are correct to say that investors are more focused towards defensive at the moment.
What about ETFs, exchange traded funds? That is the big buzzword. What is your understanding? Do you think ETF money will remain intact in EMs?
Well, we don't really cover ETFs as such, But there is an increasing trend of asset flows going into ETFs, and there are some funds and there are some tracker funds which are employing ETFs to manage, to mirror the performance of hedge funds in the region.
Okay. In terms of a broader understanding for Asia, so what is the big picture? Are money managers inclined towards buying Asian equities, or right now there is a general disconnect or a disregard for Asian equities?
Well, we're seeing what can be considered a new norm since 2008, which is basically a highly volatile environment. So managers have now, the remaining managers, because quite a few shut shop and they closed their hedge funds since 2008. But the remaining ones have adjusted to this, what we are calling a new norm, which is basically very high volatility. So they have introduced new risk management features. They have invested in that. And the outlook for the regional hedge funds remains positive. We are seeing more hedge funds set up than hedge funds closing. And some of the larger names, some of the larger global hedge fund firms have expanded into Asia recently.